Hey guys, welcome back. Now, Warren Buffett is arguably the world's greatest investor with a net worth of around $136 billion. He made his wealth mainly through the US stock market. Now, every 3 months, due to regulatory filings, we get to see how Mr. Buffett has been investing. And this is something I've been personally following for the past few years. Normally, his buys and sells are relatively small, less than 1% of his portfolio. However, just last week, he made an enormous change to his portfolio, 30 times the size of what he normally does. And so the question is, does Warren Buffett see a market crash on the horizon? Now, although he hasn't come out and said those exact words, normally what people do is a lot more valuable than what people say. And so, in this video, we'll be looking at the big move just made by Warren Buffett and now what his portfolio currently looks like. Then we'll try to uncover the why. Does he see a market crash on the horizon? And then we'll finish up with a bit of a bonus, a quick way to see over 100 different investment portfolios, and we'll look at a 1 year, 3 year, 5, 10 and 20 year time horizon, and we'll see which one ultimately has been the best. Okay, so first up, let's take a look at the massive move just made by arguably the world's greatest investor, Mr. Buffett, and what his portfolio now looks like. And so first thing to point out is the enormity of what he's just done. So Warren Buffett's Berkshire Hathaway portfolio, each quarter we get to see what he's been doing. So the latest one was Q2 for this year. This was last quarter, then Q4 going back. And what you'll notice is that when we look at it as a percentage change to his portfolio, normally, even though they're billions of dollars, they're normally a very small percentage of his actual portfolio. And as we go back, most of the time, it's not even a 1% change. So they're just little tweaks. However, just last week, Warren Buffett made a change to his portfolio to the tune of 30% by selling half of his largest position in Apple and reducing it by 50%. So this was an absolutely huge move by Warren Buffett, and it begs the question, why has he done this? So just jumping in, and this is what Warren Buffett's portfolio now looks like. And it's valued at around $280 billion. So if you haven't seen Warren Buffett's portfolio before, or you've not seen it for a while, essentially it's made up of 40 positions. Now, these are the top 20, and then for obvious reasons, I've grouped the last 20 positions into just this last slice here, which I've classed as other. So really, it's made up of 20 positions. And in fact, you could probably even just take the top 10 and pretty much have his entire portfolio. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we can probably say the vast majority of his portfolio are just these 10 positions. And the epic move just made was reducing his Apple position by half. So when it comes to portfolios, it's always good to get the most information as possible, as if you're missing 1 or 2 pieces, it can completely change what you're looking at. So knowing what his cash position is, we can now take a look, including his cash position. So this is a more of a clearer picture. So now we clearly get to see that he's 50% invested into the market and he's 50% in cash. More precisely, he uses short-term government bonds, which we'll take a look at in a second. So it's a cash equivalent. Now, one of the interesting points is that historically, Warren Buffett has recommended to be 90% invested and 10% cash. And then over the past few years, this cash position has been increasing, but to be 50% in cash, this is something not seen in a very, very long time. So speculators like myself are wondering, what does Warren Buffett see? So that was the latest big move. This is his current portfolio. Now let's just take a little look at this cash position. So this is the US Treasury yield curve. And this is what you get by investing into government bonds. And Mr. Buffett is putting his cash position into short-term government bonds. And right now, the yield curve is broken. And this is getting lots of headlines because the yield curve is backwards. So you can lend your money to the government for 1 month, 3 months, 6 months, all the way to 10 years, 20 years, 30 years. And if you're going to lock your money away for 30 years, then you should be getting the highest yield. So the yield curve should be going from low, a nice curve, into high as you take more risk. However, right now the bond market is broken, the yield curve is inverted, and you can get the most amount of money, the best yield, by only locking your money away for 1 month, which is crazy. So there's no incentive to lock your money away for a long time. So people like Warren Buffett as just taking massive amounts of cash. They're just putting it into a 1-month government bond, getting over 5%. And then a month later, you still have access to the money and you can just keep rolling it over. Month later, just roll it back in, milking these super high rates. And because Warren Buffett's cash position is so high, when we look at what 5% of it is, it comes out to a huge $14 billion. So essentially, by making this move, Warren Buffett is making over $1 billion each and every month by pretty much using a risk-free investment. So that is certainly one of the reasons why he's going into cash. You get a guaranteed 5% by taking no risk. Now, what else could be worrying Warren Buffett about the US stock market? So 3 things to look at, and the first one is the classic Buffett indicator. And Warren Buffett has said that this is one of the best ways to see whether the stock market is overvalued or undervalued at any given point. And essentially what it does, it takes the US stock market and it divides it by GDP, and then you get a percentage. Now, I'd probably split this up from 1950 going all the way to the year 2000, as I think year 2000 marks the new age, going from the industrial age into the digital age. And you'll notice from the year 2000, the readings completely change. So I do think we're now in the digital age, and any data before this will quickly soon become irrelevant. However, in the dot-com boom, when everything was first kicking off, it set this massive reading of 162%. So you'd have to say that this was very overvalued, even for the year 2000. And a low point in the more modern era would be 69%. However, when COVID kicked off, we can see it shot up to a crazy over 200%. It did revert back down. However, right now, again, we're getting close to this 200% mark. So you'd have to say that the US stock market is looking very overvalued. It's way higher than it was in the dot-com boom and then crash. So this is certainly something on his radar. Number 2. This has to do with the US interest rate, the Fed's funds rate, and what this shows is from the year 2000, when you keep interest rates very, very high, it leads to a nasty recession because high interest rates are not good for the economy. it makes borrowing a lot more expensive, and by borrowing, this is how businesses grow, and it's the businesses that employ people, it's the businesses that need to sell product which make up GDP. So high rates, not good. And what does it do? Lead to a massive crash, year 2000, and a nasty recession. And we see the same thing here, high rates, keeping them higher for longer. This led onto the great 2008 financial crisis and a nasty recession. This was the track that it was going to take before we had this COVID crash and recession, and then this is where we're at right now. So this is, again, probably something Warren Buffett is keeping an eye on. Higher rates mean two things. It's bad for the economy, meaning it increases the likelihood of a crash, and you get the benefit of savers now become the best investors, because you can get a guaranteed 5% by taking no risk. So this too is certainly something that he'll be looking at. And then number 3, it's what's going on with the S&P 500 right now. And looking at the S&P 500, first of all, we can see that it's done almost 17% so far this year. And for context on this, the S&P 500 normally does about 10% for the year. So it's massively ahead. Now, at one point, only a couple of weeks ago, this did get up to almost 20%, and this was just in July. So obviously there was a big pullback, and this went down about 9%. But again, the market has bought the dip and just ripped it back higher. So overall, the S&P 500 for the year is well above 10%, its normal average, and we're only in August. So again, this is probably concerning for people like Warren Buffett. The market is looking quite bubbly. So those are the 3 warning signs probably being looked at by Warren Buffett. And then, as mentioned, we're going to finish with a bit of a bonus, looking at over 100 different portfolios and seeing which one, in hindsight, has been the best one. So there's a great website called Lazy Portfolio ETF, and what they do is they put together all the most well-known portfolios. So this includes just investing in stocks, just investing in tech stocks. It looks at the Warren Buffett strategy, which is normally 90% invested, 10% government bonds. It has the 60-40 portfolio. And then if anyone has ever studied portfolio theory before, you'll probably notice ones like the Core 4 portfolio. We have the Yale Endowment portfolio. We have the classic 3 fund portfolio, the Golden Butterfly portfolio, Mark Farber, another billionaire's portfolio. We have Ray Dalio's classic all-weather portfolio, and so on and so on. And there are many, many different kinds. And we can look at the performance of all these portfolios over a time period of 1 year, 5 year, 10 year, and 30 year, and see in a few seconds which one has ultimately been the best one. So pretty cool stuff. Now, in the short term, let's just look at the past year, and it's saying that US momentum portfolio, 100% invested, has been best. Clearly showing that the US stock market is having an incredible year and is probably looking a bit bubbly. And even gold has been in the top 3 in the short term, with going up 25% this year. Now, as investors, we do want to think a little bit more long term. So over a 5-year period, we now see tech stocks, the Nasdaq 100, outperforming everything else 20%. But it's still US stocks and Warren Buffett that's coming in a close second. Now, over a 10-year period, it is still tech stocks. It's still US stocks and Warren Buffett's strategy coming in top, but tech stocks getting about 18%. Then over a 30-year period, what do you think has done best? Well, Again, it's tech stocks, technology stocks with a simple one ETF strategy of triple Q has given almost 15% a year for 30 years. And this is crazy. Followed by US stocks. So as you can see, this has been the theme for not just 30 years, but 10 years, 5 years. So very interesting indeed. Now, the only thing is what this would look like if we start adding some crypto into the portfolios. As if we look at Bitcoin, well, Bitcoin hasn't been around 30 years, but for 10 years, Bitcoin would be ahead of everything else. 5 years, it would be ahead of everything else. 1 year, obviously it's very volatile, but it would be great to see what these portfolios would look like if we included some crypto. Warren Buffett is arguably the world's greatest investor, and he has just given a bit of a warning through his latest move. He recently sold half his position in Apple to the tune of $80 billion, a huge de-risking, and now his asset allocation is 50% invested and 50% in cash. And for context, Warren Buffett is quite famous for recommending being 90% invested and 10% cash, so he's clearly moved to a massively defensive position. With interest rates still above 5%, it means he's now making over $1 billion each and every month, pretty much risk-free, which is crazy. So there you are, guys. Hope you enjoyed. Now you tell me, does Warren Buffett think a crash is coming, or is he maybe just winding down into retirement? Let me know below. However, just remember, to get rid of 100% of the comment spam and trading bots that plague YouTube comments, we are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.